Dirty dealings, corporate battles, consumer woes. This is Evening 5. Sime Darby saw its second quarter net profit soar due mainly to the 2 billion ringgit gain on the disposal of Ramsay Sime Darby Healthcare in December 2023. In a boss filing, the conglomerate said earnings jumped to 2.29 billion from 389 million, while revenue rose 37.7% to 15.55 billion ringgit. Sime Darby declared a dividend of 3 cents per share. For the first half, bottom line surged to 2.88 billion from 596 million as revenue improved by 25.8% to 29.53 billion versus 23.47 billion previously. Sime Darby Group CEO Dato' Jeffrey Salim Davidson said Sime Darby's full exit from the healthcare business will allow the group to fully focus on growth of its two core businesses, which are industrial and motors. Meanwhile, the acquisition of UMW Holdings will help broaden its earnings and unlock further value. Going forward, Sime Darby expects to increase the prices of cars offered under its motor business in Malaysia following the increase in the sales and service tax. He highlighted that the tax rate increase will be applicable to all other automotive players as well, so Sime Darby will treat it as part of its cost of doing business. On China, he said the country's economy is merely going through a trough and that its recovery is imminent, so there is no possibility of Sime Darby leaving the very profitable market. In the meantime, increased profits from Sime Darby's Australia-Asian operations should further strengthen its industrial business and continue to contribute positively to earnings. Sime Darby's shares ended the day unchanged at 2 ringgit 64 for a market capitalisation of 17.93 billion ringgit. Former Sarawak Governor and Chief Minister Tun Abdul Taib Mahmud died early Wednesday morning in the hospital in Kuala Lumpur at the age of 87. This was confirmed by Sarawak Youth, Sports and Entrepreneur Development Minister Datuk Sri Abdul Karim Rahman Hamzah Bernama reports. Private Secretary to Deputy Minister of Economy Datuk Hanifah Hajat Taib, Nur Shafiq Abdul Karim also confirmed the news of Abdul Taib's passing. The Sarawak government has declared a 2-day mourning period with flags to be flown at half-mast and any entertainment events would be postponed. On his official Facebook, Prime Minister Datuk Sri Anwar Ibrahim expressed his condolences, saying that Malaysia has lost a respected statesman whose service and devotion to the nation and the state of Sarawak will be remembered. Deputy Prime Minister Datuk Sri Fadila Yusof described Abdul Taib's passing as a great loss to Sarawak and the country. Sarawak Premier Tan Sri Abang Johari Tun Openg pledged to continue Abdul Taib's legacy, especially in efforts to develop the region and Malaysia in a more structured approach. Born on May 21, 1936, Abdul Taib helmed the state as the Chief Minister for 33 years. Named the father of modern Sarawak, Abdul Taib introduced various development agendas aimed at bringing progress to the relatively undeveloped state at that time. Among his efforts to stimulate economic activities in Sarawak was the establishment of industrial zones in Samajaya, Temak Laut, Samalaju and Tanjung Manis, which created job opportunities for the local population. Under his administration, the Sarawak Corridor of Renewable Energy or SCORE was also established to drive the development of renewable energy sources such as hydroelectric power in the state. The Israel-Palestine conflict boycott of the Starbucks franchise dragged Berjaya Food down to a record net loss of 42.58 million for its second quarter versus a net profit of 35.49 million a year earlier. Earnings were also hurt by a 10.5 million one-off loss from the disposal of its entire equity interest in Jollibean Foods, according to its boss filing. Quarterly revenue fell 38% to 182.55 million versus 295.32 million previously on lower sales. Likewise, for the first half, BFood fell into the red with a net loss of 23.55 million as compared to a net profit of 70.19 million last year, while revenue fell 21% year-on-year to 461.1 million ringgit. Despite the poor financial performance for the first two quarters, BFood said the group expects its operating performance to show improvement in the remaining two quarters of FY 2024. BFood believes that the operating performance will rebound and regain momentum, viewing the current situation as short-term and anticipating positive progress going forward. Petronas Chemicals Group has inked an MOU with Sarawak Petchem to conduct a joint feasibility study to develop a low-carbon ammonia and urea plant in Bintulu. This confirms a story by The Edge, which reported that Petronas and the Sarawak State Government were expected to sign a preliminary agreement to facilitate discussions and assess the feasibility of the project. The Edge reported that the two parties are considering a JV for a large-scale blue ammonia plant in the state, estimated to be worth about $1 billion. In a joint statement today, PCG said the two companies will conduct a joint comprehensive study on the technical and commercial aspects, among other considerations, in meeting rising demand for cleaner energy solutions. Sarawak Premier Tan Sri Abang Johari Tun Openg said this plant will have a future capability to produce ammonia with a very low carbon footprint. Meanwhile, PCG MD and CEO Mazwin Ismail said the project is potentially PCG's first low-carbon project, and the collaboration with Sarawak Petchem facilitates its further expansion into the Southeast Asian urea market. Utility services firm Reneuco and engineering group Citaglobal announced on Wednesday that the consortium has secured a contract worth $600 million for electricity supply to the East Coast Rail Line. The contract includes development of the transmission and maintenance of the assets over 30 years, according to the companies. Project owner Malaysia Rail Link will have the option to renew for another 30 years. Citaglobal has a 60% stake in the consortium, while Reneuco holds the remaining 40%. Under the terms of the conditional contract, Citaglobal and Reneuco would have to create a special purpose company with 70% of the stake to be held by the consortium and 30% by MRL, as well as for the assets to be operated and maintained by the SPC. Citaglobal Executive Chairman Tan Sri Dr. Muhammad Nurza Zakaria said the contract will allow the group to broaden its presence in the energy sector, particularly the renewable energy segment, and at the same time further diversify its revenue and earnings base to build recurring income streams. For Reneuco, the concession is expected to pave the way for expansion in the renewable energy and utility segment as the company further explores new business opportunities, according to its executive chairman, Datuk Mustaqim Matnun. It should be noted that in early February, Reneuco was classified as a PN17 affected listed issuer and came within a whisker of being suspended after it had issues submitting its annual report. Reneuco's shares were among the bourse's most actively traded, with over 68 million shares transacted, closing 2 cents or 27% up to 9.5 cents on Wednesday. Citaglobal was down 1 cent or 0.7% to RM1.42.